What is happening, people? It is your boy Jack and we're back with another video. But before we get into anything, I just want to say I hope you're all keeping well, because the world's crazy right now. There's a lot of bad things happening, there's a lot of bad news out there, so I just hope you're all doing okay. You know the world is doing quite poorly when McDonald's, the world's biggest restaurant chain in the whole world, has to close down all 1,350 of their restaurants in the Ireland and UK. It's unprecedented. I tried to see if this ever happened before and I couldn't find a single time in history where this has happened before. So the news came out yesterday that all 1,350 of McDonald's stores in the Ireland and UK will be closing down until further notice. And that begs the question for us long-term investors is now a good time to buy McDonald's stocks? And that's what we're going to be speaking about today. And one thing that is both funny and sad is that I decided to open a position in McDonald's last Friday before all of this news came out. But anyway guys, before we get into everything, I'm just going to ask you, please smash the like button for me. It helps the channel grow. The support has been crazy lately. I appreciate every one of you. Comment, let me know your thoughts on McDonald's stock or any other stock for that matter, and subscribe so you never miss a video in the future, guys. But anyway, let's get straight into this. So the very first thing we're going to look at today is McDonald's stock after market open, after all this news came out. So we can see this is where we opened, went up a little bit, we went down, we shot up, and now we're coming back down. So it's a little bit all over the place. The market doesn't know what it's doing. A lot of stocks look like this right now, but ultimately, as of recording this, we're nearly 40 minutes into market open. It's down 0.77%. It's been up 2%, it's been down 2%. It's not really gone anywhere crazy, and there was a lot of movement in the stock market again today. So did this news really impact McDonald's? No, and I'll tell you why I believe it is. It's because Ireland and UK have 1,350 restaurants altogether combined. McDonald's Worldwide have 37,855 restaurants. So although nobody wants to have to close 1,350 of those, it's not the biggest percentage in the world, and it's not going to just collapse the company. That's why I don't think there has been the biggest knock-on effect in their actual stock price because of this news. It's not the biggest news in the world to a company that has this many restaurants. Now obviously it's a bad thing to have happen, and it's going to reflect in their next quarter's earnings and everything along those lines, but it's not the end of the world for a company like this. Now when I think things will get scarier and the stock price may see a bigger reaction and may go considerably lower is if the US has to shut all of their stores, or a large proportion of their stores, because they have 14,146 stores as opposed to our 1,350. They have over 10 times as many stores as the Ireland and UK combined. So obviously that would impact their stock price a whole lot more, and the US are nowhere near at the peak of this virus, so there is potential for that to happen. And that leaves the question, are they a good stock to buy now? And I think the answer is yes, but I also think the answer is they're a better stock to buy a little bit further down the line, because there is so much potential for them to go lower with this virus that's going on right now. If the bigger places like the US start getting impacted heavily and have to close all their stores, well obviously that's going to affect the stock price a lot more than little Ireland and the little UK. Now the next two things we're going to look at is how they look on Simply Safe dividends, and also their max and 5-year charts, just to see how they've performed in the past. But first of all, let's just have a look. They have a dividend safety score of 77, which is clear to see why. I'll show you why in 1 second. And they have a dividend yield of 3.41%, so nearly 3.5%. Now, is this dividend at risk? That's the question everybody's going to be asking. First of all, let's have a look here. McDonald's says dividend remains a paramount priority. Of course it is. Look how long they've been paying it for. They've been paying their dividend for over 45 years. They've grown it 17% in the last 20 years. They are putting so much emphasis on paying their investors their dividend because they know how attractive it is to us. They know that we believe in this company so much, not only because it's a massive, massive chain, but because they have paid and grown for over 45 years. They are so close to 50 years in a row, which would make them a dividend king. They cannot afford to lose that. They will do everything in their power to pay us investors. I just think about how much money McDonald's has. We're going to go into that a little bit later, but they have so much cash sitting around. They will be able to get through anything that is thrown at them, and they will be able to pay us no matter what happens, and they will find a way no matter what to pay us, because it's so important to them that they keep our money, we keep investing and stay invested in them. Now we're going to have a quick look at the 5-year chart, and we can just see it's beautiful. It's just nothing but steady growth until now, obviously. And then let's just have a look at the max chart, and again, it's absolutely beautiful. It is nothing but steady and quick growth, and then boom, a dip like we have never seen before in the history of the McDonald's stock. In the history of McDonald's, we have not seen a dip like this. In the recession, they nearly grew. They barely went down at all, and we'll get to that a little bit later as well. Never have they given us an opportunity like this. It is crazy, it is unprecedented. So again, we'll ask the question, do I think McDonald's is a buy now? I do, but I think it's also a better buy a little bit later. I bought them just at about 150, maybe slightly below 150, and I think that was amazing. And if I can buy them even cheaper, I will. I personally am not going to buy any more in McDonald's until I see something that shows that they're not going to keep going down, because right now there's so much that could go wrong for a company like this. It's a very scary place, so I'm happy just having my initial investment and not putting any more in just yet until it gets cheaper. And if it gets cheaper, it's crazy. Just look how much it's already gone down. I think it's close to 30% that this stock is down right now. For a company like McDonald's, that is crazy. Now here's a couple of really important things to take into account when we look at McDonald's, and really exciting things for investors like us. Right, so we've already spoke about their dividend. They've generated positive free cash flow in each of the last 10 years, and a lot of it that I will show you later on. Their sales were relatively stable during the financial crisis. They only dipped 5.8% in their sales. And look at this next one, it's beautiful. Their stock significantly outperformed the market during the Great Recession and returned -3%. The S&P 500 lost 55%. They absolutely mashed the market to pieces during the Great Recession. They are a recession-proof stock who is currently down close to 30%. Does anything else need to be said? They're at such a heavy discount. I don't know if they'll ever be this low again. It's impossible to know. Even if they go lower, McDonald's is not going to stay down there forever. They're going to recover, and they're going to recover just as hard and grow just as hard as they have forever. They most recently recorded total assets of 48 billion, which is quite nice. They have a lot of assets and a lot of cash sitting around to help get them through tough times. And just one more on their free cash flow margin. This free cash flow is the amount of cash a company generates after paying all of its expenses and investing to maintain and expand its business. They have 26% free cash flow. For a company making as much money as McDonald's, they have an awful lot of cash just sitting around doing nothing. An awful lot of cash that will get them through the tough times and will pay us dividend investors. Honestly, I think if you're like me and you're a long-term investor, this is one of those stocks that you could not possibly go wrong with. It's one of the biggest in the world. It's like Disney. It's another one I spoke about recently. You don't have to be a genius to invest in either of these stocks. We all understand them. You go anywhere in the world, you're going to see Mickey Mouse. You go anywhere in the world, you're going to see McDonald's. You go on holidays, you're going to see them. It doesn't matter where you go. It's a name that everybody in this world knows, and they are the companies. They're safe. They are going to make money. People are always going to be buying from them, no matter how tough times get. Like we said, in the recession, their sales dropped 5.8%. It's nothing compared to what most companies were doing in the recession. Now we're going to get a nice idea of McDonald's net income over the last 15 odd years. So we can see up and up and up, and now we are at an all-time high. So it has been up and down, whatever. We are at an all-time high as of 2019, 2018. It has gone up. The trend is good. The trend shows a lot more money. They've more than doubled it in 15 years, their net annual income. It is crazy. They're making a lot of money. They're already the biggest in the world, and they're growing extremely, extremely fast. And now we're just going to have a quick look at McDonald's gross profit as well. And again, we can see the same situation of it just being a steady climb to the top, baby. It has gone up and up and up. It is beautiful. They are making more and more money on a yearly basis. It's a no-brainer, man. They're making so much money just sitting around there. So some closing thoughts on McDonald's. In the short term, are they scary? Yes. In the long term, has their business model changed? No. I still think they're an incredible long-term investment, and that's why I did open a position in them last Friday, and I plan on adding to that position as the price does get cheaper and cheaper. I do definitely believe there is some more room to drop. So again, the question, is this a good stock to buy now? Yes and no. It's a great stock to buy now, but it could be an even better stock to buy next week, 2 weeks, or a month down the line. But again, don't try and time the market. We do not know what's going to happen in a week or 2 weeks time. We could miss the best day that they've ever had out of nowhere. The market's in a crazy place right now. Anything can happen. We saw Uber go up 40% in one day last week. That can happen at any time, and that's why I like opening an initial position in a company and then dollar cost averaging my way down, just to make sure that I don't miss out if something crazy is to happen. In the short term, I may well lose money, and that is evident from my portfolio right now. I think I'm down nearly 25% since I've started investing. But in the long term, I'm not worried, because I know eventually all of these companies that I believe in will bounce back, will recover. I'm investing in predominantly very safe companies. So guys, I do really hope that you enjoyed that video. If you did, again, please smash the like button for me. It helps me out a lot. Check out one of my other videos if you want. I speak about an awful lot of stocks. And subscribe if you're new so you never miss a video. But anyway guys, stay safe, and until the next one, peace.